One of the less acknowledged facets about China is the complexity and occasional turbulence within its economic landscape, a feature that often eludes public understanding. Frequently, China's economy is depicted as an ever-expanding behemoth, effortlessly churning out billionaires and fostering relentless economic growth. However, akin to its Western counterparts, China too experiences the repercussions of economic uncertainties, including bankruptcies, scandals, and business failures. A case in point is the plight of the Bohai Steel Group, a company that carries significant importance due to its status as a state-owned enterprise. Directly under the purview of the Chinese government, this organization, while operational, was among the world's most prominent steel manufacturers. However, despite enjoying the Chinese government's backing and boasting an impressive global standing, this titan suffered an unexpected collapse in 2016, an event that caught everyone off guard. News outlets reported a staggering unpaid debt of over 200 billion yuan, or approximately $28.4 billion on Bohai's account. This staggering sum precipitated what was widely regarded as China's most substantial bankruptcy restructuring in history. Thus, the tale of the Bohai Steel Group poses several questions. What led to this situation? What does the history of Bohai Steel look like? Join us as we delve into this intriguing story. Formed in 2010 through the unification of four leading steel manufacturers, the Bohai Steel Group quickly became a symbol of China's industrial revolution and burgeoning economy. This merger, orchestrated by the Tianjin municipality, was a deliberate move by the government to enhance the efficiency and competitiveness of the national steel industry. By the time of its inception, the combined entities had already contributed over 21 million metric tons to the annual steel output, instantly establishing Bohai Steel as one of the largest steel makers in the nation. The group, bolstered by billions of dollars in revenue and a workforce numbering in the thousands, quickly earned its place on the Fortune 500 list. As a state-owned enterprise, Bohai Steel represented far more than a business entity. It was a tangible manifestation of the country's industrial power and commitment to global competitiveness. Its considerable production capabilities were instrumental in driving the nation's construction boom and supporting a multitude of related sectors. However, the group's rapid rise was not without its perils. In its ambitious quest for growth, Bohai Steel amassed considerable debt, including a credit line of over $4.6 billion from the Bank of China in 2013 alone. Despite having a staggering 105 creditors, each owed billions in Chinese yuan, the group continued its aggressive expansion. By 2015, years of debt-fueled growth had pushed Bohai Steel to the brink of a debt crisis, causing production to dwindle significantly. In response, the central government mandated a near 70% reduction in capacity. Over the next 3 years, the Tianjin government and the company's numerous creditors engaged in negotiations over how to manage its towering debt, which totaled 243 billion yuan, or about $36 billion. This crisis was driven by a double-edged sword. Firstly, Bohai Steel, much like other state-owned enterprises, had grown aggressively, supported by easy access to credit. This growth was sustained by China's infrastructure boom and a seemingly insatiable demand for steel, which ultimately led to oversupply and falling steel prices. Secondly, allegations of mismanagement and corruption further complicated the matter, with the group's leader investigated for serious disciplinary violations, a common euphemism for corruption in China. By 2018, the group's ballooning debt and declining profitability led to the inflation of bankruptcy proceedings, shocking the Chinese steel industry. In preceding years, the group's top-performing unit, Tianjin Pipe Group Corp., was separated from the conglomerate, which was then composed of 208 large corporations and subsidiaries. By April 2018, the Bohai subsidiaries possessed assets worth 115 billion yuan against liabilities totaling 243 billion yuan, pushing the debt ratio above 200%. Meanwhile, the separated Tianjin Pipe accumulated 52 billion yuan in unpaid debts against assets worth 38 billion yuan. Following the onset of bankruptcy proceedings for Bohai Steel, the Tianjin government launched a restructuring effort to salvage the struggling enterprise, demonstrating the Chinese government's preferred strategy of restructuring over outright dissolution of faltering state-owned enterprises. The key objective of the restructuring plan was to manage the massive debt burden of 192 billion yuan, or $28.9 billion. The plan included provisions for debt-to-equity swaps and welcomed strategic investors. Another steel manufacturer, known as DeLong Holdings, played a significant role in this plan, acquiring a substantial stake in Bohai Steel, injecting much-needed capital and infusing a sense of optimism for the troubled steelmaker's future. The restructuring process was not without its challenges, however. Despite the government's push for expedited restructuring, handling claims from thousands of creditors and resolving the astronomical debt proved to be a formidable task. The downfall of Bohai Steel can be traced back to China's booming steel industry, which, during the prosperous years of the country's economy, was a profitable sector. Companies like Bohai Steel thrived on high demand driven by rapid industrialization and urbanization, leading to overproduction and significant debt accumulation. However, as the economic growth slowed down, the demand for steel declined, leaving companies burdened with excess capacity and colossal debts. And Bohai Steel was no exception. This combination of overcapacity, dwindling demand, and unsustainable debt levels ultimately led to Bohai's collapse. Beyond the company-specific factors, Bohai's downfall also reflected broader systemic issues within China's corporate sector, including the role of local governments and state-owned enterprises. Like many other local governments, Tianjin had bolstered local companies with easy credit access to spur growth. When the economy took a downturn, these entities found themselves in a precarious situation, struggling to service their burgeoning debts. In managing Bohai's debt crisis, the Tianjin government faced the delicate task of preventing wider financial instability. This led to a drawn-out debt restructuring process that aimed to satisfy creditors, inject fresh capital, and reinstate the company's operations under new leadership. The case served as a landmark in China's endeavor to address corporate debt problems, particularly those related to state-owned enterprises. In 2019, after 3 years of negotiations with its creditors, Bohai Steel reached an agreement on a bankruptcy reorganization plan. The plan will encompass 48 entities under the Bohai Steel brand while liquidating an additional 160 subsidiaries. Bohai Steel's assets are to be distributed among 17 companies housing its core steel business assets and 31 companies holding non-core assets. The core business components, valued at $8.7 billion, will be partially acquired by private steel manufacturer Tangshan DeLong Corporation. Additionally, Tangshan DeLong has committed to investing a further $3 billion in Bohai Steel to repay its debts and bolster business operations. In addition to the corporate issues, individual figures also encountered severe indictments, with several subjected to anti-corruption scrutiny by the Chinese government. These individuals were thrust into a harsh spotlight, grappling with inquiries from investigators and resentment from creditors. Thus, the downfall of Bohai Steel was not merely a consequence of economic and market conditions, but equally a testament to failures in corporate governance. And just like that, one of China's behemoths of a steelmaker had finally crumbled down. The collapse of Bohai Steel signaled one thing: the Chinese economy isn't what most people think it is. Firstly, the collapse highlighted the risks inherent in China's debt-fueled growth model. Bohai Steel's bankruptcy served as a warning sign for other heavily indebted companies and demonstrated the government's willingness to let large state-owned firms go under, a break from the tradition of state-backed bailouts. Secondly, it showed the central role of local governments in handling corporate debt crises. The Tianjin government played a pivotal role in Bohai's restructuring, showcasing the government's active role in managing corporate insolvencies. Finally, it underscored the need for reform in China's corporate sector, especially state-owned enterprises. excessive debt, overcapacity, and inefficient operations were all highlighted as issues that needed to be addressed. Now, it's important to remember that while the collapse of Bohai Steel was a significant event, it's not a death knell for China's steel industry or its economy. The Chinese government has been making concerted efforts to reduce corporate debt and streamline state-owned enterprises, but the road to reform is long and fraught with challenges. The Bohai Steel Group's tale serves as an illustrative case study. It exposes the intricate layers of China's economic structure, revealing how unsustainable debt, overcapacity, and economic slowdown can bring a formidable giant to its knees. This narrative also casts light on the commendable efforts by local governments and state machinery in handling corporate crises, their preferred restructuring approach, and their tenacity in preserving financial stability. But anyway, do let us know what you think. Thanks for watching.